We discussed the yen's advantages as a safe investment in the previous video. Let's discuss why should we invest in the yen in this video. The yen is declining at its fastest rate in 20 years, but unless Japan implodes, it is predicted to one day return to its previous value and start making money. The value of the yen will undoubtedly increase if Japan's economy expands in the future and the US decreases interest rates. Why the Japanese economy can expand and whether it can endure till interest rates in the US are reduced are crucial questions. 3 primary factors make this feasible. 1. The third largest economy in the world is one reason. 2. Because of its extensive overseas asset base, stability is great. 3. Due to the existence of fiercely competing items built on cutting-edge science and technology. It could be considered a safe asset as a result. Let's start by examining the causes of the yen's present weakness. 1. Weakness caused by the state of the economy. The macroeconomic situation is unsettled on a worldwide scale right now. Japan is a typical exporter and is heavily reliant on raw materials. Thus, the conflict between Ukraine and Russia and inflation raised commodities prices, which had a detrimental impact on the nation. The trade deficit's impact on the worsening of the current account balance has been more significant than other factors. 2. Financial policy. Macroeconomics are significant, but the fundamentals of Japanese monetary policy are more significant. This is so that Japan's interest rates remain unchanged despite the US Fed's tightening of policy. As a result, more investors desire to buy the dollar at a higher interest rate and sell the yen at a lower interest rate, which inevitably cause the yen to weaken. Furthermore, the Japanese government is pursuing this course of action because it wants the yen to decline. This is due to the government's decision to maintain a weak yen and not intentionally raise interest rates in order to maintain export competitiveness. This is so that more products may be sold to clients abroad at lower prices and more goods can be exported. So why would you buy yen now if that were the case? First of all, given the significance of the yen in the global economy, it is believed that the yen will appreciate greatly when US inflation starts to decline because the yen is now assisting the US. The majority of people who discuss the reason for the yen's present depreciation point to the disparity in interest rates between the US and Japan. Although the Japanese yen has an interest rate of 0%, nobody wants it because the US dollar, a very safe asset, can earn interest rates of 4 to 5%. It is obvious that the sharp increase in US interest rates had a considerable effect on the yen exchange rate. The yen, however, moved in a completely different path from 2016 to 2019 due to the ongoing US interest rate hikes throughout that time. Despite ongoing interest rate hikes through 2016, the yen has risen since the US began tightening its monetary policy in 2015. The current weak yen cannot be explained solely by the differences in monetary policy between the US and Japan. Compared to 2016, the present US interest rate increase is different. Inflation has replaced deflation as the dominant trend as of late, although this is only because interest rates have been hiked to combat inflation. A strong dollar is one of the finest weapons for limiting inflation. A strong dollar is a very effective weapon for the US to reduce import costs and manage inflation. To keep its own inflation under control, the US is merely using the Japanese yen. Japan is the country that owns the most US bonds globally. In the midst of the world economic crisis, individuals are turning to the yen for one simple reason rather than the dollar. This is due to Japan's ability to massively pull the yen and send the dollar into the market during times of crisis, strengthening its currency. Although the Japanese currency is currently very weak, Japan's external net assets have grown by 15% from a year ago. There is a widespread perception that Japan is not doing enough to protect its own exchange rate at the moment. Perhaps it is believed that the US is deliberately weakening the yen while strengthening the US dollar. Because Japan has a chance to end decades of deflation and the US can control inflation. It is very possible that the value of the Japanese yen will swiftly shift to appreciate if inflation in the US declines. The interest rate spread in the US is currently inverted. While long-term interest rates are not rising because of the economic slowdown, short-term rates are rising as a result of quick rate increases. Japan will sell U.S. bonds when U.S. inflation starts to decline and use the proceeds to buy Japanese yen in order to strengthen the yen and profit from currency gains. The difference between long-term and short-term interest rates returns to the usual range in the U.S. when long-term bond yields increase, and the increase in long-term interest rates slows down real estate market values, which can stabilize the economy by gradually reducing the inflation rate. Additionally, the U.S. can only respond to the next crisis when it hikes interest rates to a sufficient level at a time when the U.S. economy is almost guaranteed to be in a recession. As a last resort, the U.S. will attempt to limit inflation by turning its strong dollar into a weak one. Inflation is not a strategy to resolve a complex situation for this reason. It should be a way to clearly show the collapse of inflation and contribute to taking the final point. What is the U.S.'s current inflation rate, then? Massive inflation has persisted over the last few months. Short-term interest rates also increased significantly as a result. After a period of time, the inflation rate from a few months ago is finally exhibiting signs of partial stabilization. In light of the aforementioned grounds for investing, we can therefore indexically confirm that now is a great time to divide and purchase the yen. Will you merely observe? Please refrain from making hasty judgments on the yen's current state, which is at its lowest point in 20 years, by saying, "It may be so." I want you to be aware that the market frequently retraces its previous gains. We appreciate you taking the time to watch the J&J storytelling video. I'll be back soon with a more educational video.